Hello everyone and welcome to Investing Angles, to our Market Map Daily. Today we have a huge agenda. First of all, we are going to discuss volatility from various angles. Then we will move into major US indices and evaluate, first of all, the candles, how they closed today and what they are telling us. After that, we will discuss S&P 500 and Nasdaq potential Elliott Wave maps. We will also touch point on major S&P 500 sectors and a couple of large stocks like NVDA, Microsoft, Apple to see where they are heading right now. After that, in the second part of our overview, we will discuss bonds and from the perspective of yields and also the TLT, see where they are heading. That's probably wraps today's agenda, so let's begin. But before we start, make sure to hit the subscribe button. Alright, so that's the candle maps for Volatility Index. This is what they closed today. What we are seeing here is that today the VIX closed with a green candle, and technically this candle could be a bullish harami, and for tomorrow the chances for a bullish move are slightly higher. And one more thing that I would like to mention, that this candle found support at the 50 days moving average, which is a blue line, and also it closed above the 200 days moving average, which is the red line. And this is a could be fairly significant because we have a clear support here. If we have a look at the weekly frame, what we are seeing here, the volatility is in an interesting position. So first of all, I'd like to point to this one. This is a 50 by 100 days weekly moving average cross. It is fairly rare, and if it crosses, then market usually sees higher volatility. And from historical perspective, this is something to be concerned about. So no matter how the weekly candle closes, this technical element would lead us to probably higher volatility prices. And for another reference, I brought this candle formation here. So this is a VIXY, Berkshire Trust short-term futures ETF. So it's also tracking the volatility, and what we are seeing here is the clear ladder bottom. This is this formation with a good chance of reversing tomorrow. It doesn't need to be strong and big green candle. Just a tiny green one which engulfs the last red one would be sufficient. So this is very vulnerable for tomorrow, and I would like to note this. So tomorrow it looks like it's going to be a very critical day from the volatility perspective. Alright, so that's volatility. Let's move on to our indices closure. So what we are seeing here, first of all, I'd like to mention this one. Dow Jones formed a very strong bearish inside down candle. It's an equivalent of a bearish harami, or of bearish engulfing. And if we see a confirmation tomorrow, another red candle, that would be a very strong and significant signal. The SPY and triple Q here, they formed technically hammers or hanging man, and in general this is, and for S&P 500 it's also a harami candle. So this is strong bearish, and if we see a confirmation tomorrow, then we might need to get concerned. So speaking about Russell closed with another doji, This time this doji has a bearish flavor and better chances for a move down. And important, it's broke through the support level. This yellow line is 8 days EMA. All right, so that's a perspective from the cash indices from ETFs. But let's have a look at the futures. So they have a slightly different set of candles, and it makes it more interesting. So technically today, in order to negate or cancel this big red candle that happened on Monday, S&P futures needed to close above the Monday's high. It had a chance, big chance, but they lost. And right now the odds are bearish, and the chances for a move lower are significant. And if we look at the 12-hour frame, which is another significant one, what we are seeing here is that we have a bearish engulfing on this one, and potentially this formation could become a falling three methods if we see a strong red move tomorrow. So similar situation is for Nasdaq and for Dow Jones. Dow Jones also futures formed a bearish inside down. Speaking about Russell, again, it's very similar to what the cash index did. But the major concerns here are Nasdaq and S&P 500. All right, so let's move on and see what we have on the weekly frame. The weekly frame closed with green candles last week, and technically they could be bullish continuation ones. However, the break below the important support line could be a game changer, and from that perspective we need to see what kind of candle the indices form this week. So far we're seeing that IWM Russell is forming a red candle, and if it continues to do so, this could be a harbinger for the change, for the move. But anyway, we are monitoring. So far the odds on the weekly are bullish, but well, then there are 2 more days. And from the perspective of the monthly, the last 2 days made a big change, and right now I'm not so convinced that the indices might be able to close above the December high in order to cancel these bearish candles. So for example, Nasdaq would need about 3.5% in order to negate this potential bearish formation. Dow Jones is also needs some work, and I would say that at this point we can declare that it is impossible for Russell to negate this red candle. I highly doubt that it might make about 7.2% in the remaining 2 days. We'll see. Anything can happen, but the odds are on the bear side. And after that, let's move on and see what charts are telling us. So first of all, I'd like to discuss this one. This is the potential what we identified a couple of days ago. So S&P 500 formed an impulse of this bottom, and technically this could be wave 2. I was expecting potential for another wave to make a wave 2 a little bigger. So far it looks like it is tracking, but again, so we need to see how it forms, what kind of candle it forms tomorrow. So this was an impulse, fairly clean, and it even made an all-time high. But let's have a look at the slightly bigger frame. So this was our projection that we were thinking about yesterday. So what happened here? So we had a 1, 2, 3, 4 waves, and the interesting thing here, so S&P 500 made an all-time high here, and technically, from the Elliott Wave perspective, this could be the end of the impulse that started in August. And if we measure it, this wave is slightly longer than 0.618 of wave 1, which is totally legitimate for Elliott waves. So I think that this kind of scenario we cannot reject at this moment. So there is a very, I cannot say very good, but there is a fair possibility that the index is complete. But we'll see what kind of waves S&P 500 makes. And generally, what I was looking for is this one. This is the potential top. This is the potential top. We had a gap here on Monday, and it wasn't very clear what kind of wave it is. However, now we know that this wave that started at the bottom on Monday has been corrective because of this overlap. So technically the wave, if this was supposed to be wave 4, it moved too low and broke an impulse. So technically right now I'm looking for this particular formation, ABC. It could be another one. It could be ABC like this, for example, like starting with this. This could be wave A, this could be wave B, or moving a little lower, and this would be wave C. This is another perspective. So as long as it doesn't move and make another all-time high, so this bearish potential is here. And what I'm thinking about here, so this is assuming the gap was impulsive or something, we can say that this was an impulse. So this was a clear 1, 2, 3, 4, 5, clear impulse here, a bounce, another wave, potentially wave 3 with a gap, another bounce, and wave 5. So this is a totally, if this is a totally legitimate impulse, I would be concerning because of this possibility. So generally this is the perspective, and it could be a bearish setup. So as long, just to reiterate, as long as the impulse, this formation doesn't move above this red line, which is all-time high, this is a bearish setup. And if we see another impulse down, especially if it breaks below the January 13 low, we would consider a reversal here. So this would be a possibility. Right now, it's still a question, but I think that tomorrow or on Friday, you might get a very clear answer about what market is thinking about it. So far, that's we have an impulse. We have an impulse up here, and if everything goes well, then we will see this particular scenario. This is the green one. So we are seeing this and move higher. So this is for the green, for the happy path. However, if we see a move like this and then another impulse down, well, it will be most likely a reversal. Okay, so that's the perspective for S&P 500. Let's move on and evaluate the sectors, what they're telling us. It's been a surprise actually for financials, because at the beginning of the day I thought they are going to overcome this potential spinning top doji, but they fell down, and Now this formation is more bearish than bullish. Industrials are clearly moving down, and the candles today is bearish, and it technically further confirms a reversal. Technology is very surprising. So yeah, after yesterday very strong recovery candle, they pulled back today, and technically this is bearish, and bearish harami, and especially it can be reinforced with this freshly made 8x20 EMA bearish cross. So the chances for tomorrow and the day after tomorrow are fairly bearish. And if you look at the 2-day frame, this is a huge bearish engulfing here, and just a little bounce, which might not even be significant. We'll see if what kind of candle technology forms in another 2 days, but I would say that this is a very good start for a bearish move. Customer staples are kind of neutral and have a good chance to advance a little higher, but again, so we need a confirmation for either path. Healthcare is neutral with the chances to go higher, but again, we need a confirmation. Utilities also neutral. Surprisingly, consumer discretionary made a bearish candle, and the chances now for a move lower are prevailing. Energy is bearish. Now let's have a look at the bigger stocks. So Meta formed an advanced block 1, 2, 3 with a good chance to see a red candle tomorrow. Microsoft is kind of neutral, needs a confirmation. Amazon is also neutral. NVDA negated the attempt to reverse here, and right now it's sitting on a 200 days moving average with a good chance to move lower. Apple is bullish, no concerns here so far. Alphabet, it's a very mixed combo, and if we look at the 2-day frame, well, 2-day frame, it's typical, it's very similar to what technology candle did at our top, and an attempt to reverse it. Unsuccessful attempt. We'll see what kind of candle it forms. So far, the odds are bearish for Alphabet. Tesla is bearish, and it lost that 50 days moving average. We shot a video on Tesla and the perspectives for the stocks. If you are interested, you can watch it a few weeks ago. And Netflix is kind of neutral, but now it's becoming concerning because this consolidation takes so much time. Now it's 5 days without move, so now the chances for bears are increasing slightly. And now let's move on to Nasdaq. Let's see what kind of information we can get here. So far, assuming that Nasdaq made an impulse here and wave 2 and another wave 1, wave 2, so the chances for the bulls look slightly better. However, I would like to mention that this consolidation here, this consolidation of waves is not bullish absolutely, and well, we need to see a very strong impulse upward in order to resolve this formation. So far, it's not very clear, and if we look at the wave structure at the under the microscope, we can see that technically this wave down, and I'm talking about this particular wave, this wave down has been impulsive. So there is a chance that that Nasdaq is doing something like this. potentially. Let me put a different color here. So there is a chance. Now we need to see what kind of next move it does. So if it falls here below this level, it will likely invalidate the entire impulse. So far the wave looks corrective, but we need to see what kind of next move it will be. Again, a break below this line would invalidate the impulse entirely, and we would see a correction, continued correction. By the way, this wave down is very similar to what we just discussed for S&P 500, and it could be a very strong impulse after a truncated top. All right, so that's our perspective for Nasdaq. So I would say that these targets still remain on the table, 22.5 and 22,090. They are still on the table, but their probability is greatly reduced. So we need to see a strong confirmation and the weekly closure before it happens, before they gain some weight. Okay, so now let's move on to the next part, but before we go into bonds and TLT, this is our website, investingangles.com. Right now we are offering a free reader subscription for everyone who is interested in our methodology and our techniques, and you can evaluate occasional free articles using this subscription. You just need an email. As you can see, we posted natural gas daily analysis. We do natural gas and oil dailies, as well as S&P 500 and Nasdaq. And we have plenty of other reports on the weekend, and this coming weekend will be very interesting because it's a monthly and the weekly closure at the same time on Friday. All right, so let's move on to the next part of our presentation. So what we are seeing here, so these are the yields for 2, 5, 10, 20 and 30 years. The candles are telling us a very interesting story. So first of all, I'd like to point this one. This is a clear bullish engulfing for the 2-year yield. The chances for it to move higher are fairly significant for tomorrow. The 5-year yield is kind of neutral, but the 10, 20 and 30 years, they are possibly formed a ladder bottom, and now they are sitting very vulnerable to any green candle. So far we are seeing that the green candles are being formed, but we need to see a closure tomorrow in order to analyze and see a potential reversal. What I'd like to mention that after a couple of days ago, the 30-year yield formed a bullish cross, 100 days over 200, and today we had another one. The 20-year formed the same, and in a few days, maybe this week, but maybe next one, we will see the same cross happening here for the 10-year yield. So this is not a coincidence. This is a serious reason. All right, so and another interesting thing. So you can see that the 2-day moved very high, and at the same time the 10-day, 2-year moved very high. At the same time, 10-year stayed at the lower level, and it means that we are looking into this. This is the spread, our chart, and what is happening right now here. I am very, very concerned about it. So there is a possibility for the spread, and if you look at it from the Elliott Wave perspective, there is a very good possibility that spread formed an impulse here. So this would be 1, 2, 3, 4, and 5. This is a possibility. If this is the case, then we are talking about possible correction here, ABC, and maybe another impulsive wave down. And if this wave goes fairly low, then we might see a cross over the zero line. So something that we discussed way back in last week, a potential for forming an ending diagonal for ABC correction. Well, we'll see. There are still some levels here to watch, and if it happens, well, we know what will be next. And now let's move on to TLT. Let's start with the bigger picture, something that we discussed a couple of days ago. So there is a potential for forming an inverse head and shoulders. So this would be our target. However, today's candle, it looks like it's might be a bearish one, and we might see a reversal here. So this is the perspective. And if we look at this small term frame, we discussed this possibility yesterday. So far it's been on track. The biggest concern here is that the first wave could be an impulse, and we might see a continuation here. So this is the pullback that we were talking about. And speaking about this potential impulse that I identified here as 1, 2, 3, 4, 5, I am still not fully convinced that this was an impulse. First of all, because wave 1 wasn't really impulsive, and it could be corrective, and another thing, that the structure of this wave 3 is not fully impulsive. It could be, but I would like to have a more straightforward counts and ratios for wave. It still fits, but not very assuring. Okay, so then in this case we will have a possibility for an ABC, like a bigger wave, or this could potentially be 1, 2, and another wave upward. We'll see how it closes here, and now let's see what kind of candles we have, or what kind of support. So daily candle today was clearly bearish, and with a good chances for TLT to move lower tomorrow. Before we discussed these potential resistance levels and a freshly made 100 by 200 days moving average cross, a bearish cross. So the 2-3 day frame closed with a dodgy, potentially spinning top. If we see a confirmation tomorrow, it could be a reversal. For the weekly, in 2 days we will know the answer, and I highly doubt that on the monthly frame TLT would be able to form a strong bullish reversal candle. There is still not enough time for this. Well, that's the perspective, and the final chart So that's all for today's presentation. So support us with your likes, with your subscriptions. Check our website for the free reader subscription, which allows you to read our occasional free articles. And happy trading, everyone. Thank you.